In today's show, I'm going to be sharing with you the 3 key metrics to watch as the Bitcoin price tries to top this $20,000 resistance. And if you're afraid of a potential Bitcoin crash or correction, you're going to want to pay very close attention to these 3 key metrics I break down for you in today's show. Also in today's episode, on-chain Analyst says Bitcoin hodlers are only getting stronger. That's right. According to Willy Woo, the price of Bitcoin could achieve a conservative target of $200,000 in 2021. As he shares in this tweet, my top model suggesting $200,000 per BTC by the end of 2021 looks conservative. $300,000 not out of the question. The current market on average paid $7,456 for their Bitcoins. You are all geniuses. We'll be discussing this in today's show. Also, Max Keiser just went on an epic Twitter rant sharing the following. We have enough interest in Bitcoin now to overthrow fiat and central banks. We don't need any new Bitcoiners. If you're not on board, there's still time, but not much. Severe shortages are developing, and we may see a gap between $20,000 and $200,000 before any liquidity again. And he continues, I spent 10 years educating people about Bitcoin. Now it's time to pull up the drawbridge of $20,000 and overthrow fiat money and central bankers and watch panic buying by high net worth individuals gap the price to $200,000. And he continues on this thread. I'll be breaking all this down. We'll be discussing it right here in today's show. We'll also be taking a look at the latest from Plan B, the creator of the Stock the Flow, who recently tweeted, Bitcoin and central bank balance sheets have gone hand in hand the last 10 years, but now BTC is lagging behind about by 2 orders of magnitude. 100x room growth. If Bitcoin did 100x from here, that would put the Bitcoin price at about $2 million per BTC. I'll be breaking all this down for you in today's show. We'll also be taking a look at the overall crypto market. As you can see, Bitcoin and all the major altcoins are back in the red, but where's the Bitcoin price likely to go from here? Find out all this, plus so much more in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day. So be sure to smash that subscribe button, that's right, and turn on all notifications to receive daily premium crypto news alerts every single day, including weekends just like this. And before I kick off today's show, if interested in tapping into OPM, leveraging other people's money to grow your wealth and crypto portfolio, then smash that link right below the video in the description. All right, welcome back to another episode of Crypto News Alerts. I'm your host, JV. Lots to discuss today. Let's kick it off by diving into this story. 3 key metrics to watch as the Bitcoin price tries to top this critical $20,000 resistance. That's right, for the past week, Bitcoin price has been flirting with the $20,000 mark. It's like a tease, right? We reached 19,900 and some change, and then followed by a correction, which has led some traders to lose their patience. In the eyes of some traders, the lack of bullish momentum is problematic, especially considering that BTC tested the $16,200 level roughly a week ago. So experienced traders know that there's key indicators that serve as telling signs for a trend reversal. These are volumes, the futures premium, and the top traders' positions at major exchanges. A handful of negative indicators will not precede every dip, but there are some signs of weakness more often than not. Every trader has their own system. That's a fact. Everyone does things a little bit differently, and some will only act if there are 3 or more bearish conditions which are met, but there is no set rule for knowing when to buy or to sell. So futures contracts should not trade below spot exchanges. This is the first key indicator to keep your eyes out on this week. Some websites host trading indicators that claim to show the long-term to short-term ratio of various assets, but in reality, they're simply comparing the volume of the bids and offers stacked. So others will refer to the leaderboard data, therefore monitoring accounts that will not opt out for the ranking, but this is not accurate. A better method is to monitor the perpetual futures, which is the inverse swap funding rate. The open interest of buyers and sellers of perpetual contracts is matched at all times in any futures contract. There is simply no way an imbalance can happen, as every trade requires a buyer, which is a long, and a seller, which is a short. So funding rates ensure that there are no exchange risk imbalances. When sellers are the ones demanding more leverage, the funding rate goes negative. Therefore, those traders will be the ones paying up the fees. And as you can see on your screen right here, this shows the weekly Bitcoin perpetual futures funding rates. Sudden shifts of the negative range indicate a strong willingness to keep short positions open open, ideally, investors will monitor a couple of the exchanges simultaneously and avoid eventual anomalies. Now, the funding rate might bring some distortions as it's the preferred instrument of retail traders, and as a result is impacted by excessive leverage. Professional traders tend to dominate longer-term futures contracts with set expiry dates. Now, by measuring how much more expensive futures are versus the regular spot market, a trader can gauge their bullishness level. As you can see right here, it shows the Bitcoin January 2021 future contracts premium. Now, take note of how the fixed calendar futures should usually trade with about a 0.5% or higher premium versus regular spot exchanges. Whenever this premium fades or turns negative, this is an alarming red flag. Such a situation, also known as a backwardation, indicates strong bearishness. All right, now for the next key metric to keep your eyes out on this week is the monitoring volume, which is another key indicator. In addition to monitoring future contracts, good traders also track volume in the spot market. Breaking important resistance levels on low volumes is somehow intriguing, and typically low volumes indicate a lack of confidence. Therefore, significant price changes should be accompanied by robust trading volume. As you can see right here, it shows the Bitcoin aggregate spot exchanges volume, brought to you by coinanalyze.net. Now, although the recent volumes have been above average, traders should remain skeptical of significant price swings below 3 billion in daily volume, especially considering the past 30 days. Now, based on the past month of data, the volume will be a fundamental metric to watch as traders attempt to push Bitcoin price through that $20,000 level. I'd also love to know, when do you feel we're likely to break this critical $20,000 resistance? Drop me a comment right down below. Do you think it'll occur within the next couple of weeks? Do you think it'll be before the end of the year, maybe around Christmas time? Or do you think it won't be until maybe January or February? Let me know, as there's an enormous sell wall at this 20K resistance. However, I remain confident that we'll break this before the end of the year, as I've been calling right here on the show. Now, the next key metric to keep your eyes out on this week, top traders long to short ratio, which could anticipate price changes. That's right, there's no set rule or method for predicting large dips, as some traders require that multiple indicators turn bearish before they enter short positions or close their long positions. I do not give trading or financial advice right here on the show, but I would point out that I would never short Bitcoin, especially during a bull phase. Just saying. But with that said, monitoring the funding rate, spot volumes, and the top traders long to short ratio provides a much clearer view of the market than simply reading a candlestick pattern and general oscillators like the relative strength index and moving average convergence divergence. This is because the metrics discussed provide a direct gauge of professional trader sentiment, and it's crucial to have a clear view of this as Bitcoin tries to break that critical 20,000 resistance. And now, before I break down our next story of the day, on-chain analyst Willy Woo says Bitcoin hodlers are only getting stronger and that a $200,000 Bitcoin price in 2021 is conservative. And before I share with you this epic Max Keiser rant and we discuss it, first, let's take a look at this overall crypto market. We can see Bitcoin barely in the red, trading just above 18,900. I think it's important to maintain this level around the $19,000 mark to remain bullish. If we break below it, there may be a minor correction and building stronger support before we retest that $20,000 all-time high. However, I feel if we could maintain this current level, we could break out to 20K in no time, potentially within the next couple of weeks. We have Ethereum down 0.5%, trading just below $590. XRP up 2.6%, trading just below 60 cents. I also like to point out that there is an XRP airdrop because there is a hard fork. I believe it's called Spark. So how many of you are holding XRP and looking forward to that airdrop to receive some free tokens? Let me know. I also saw a tweet from Coinbase that they are supporting it, which is good news for XRP holders. Also, we have Miss Litecoin down about 0.37%, trading just below $82. We have Cardano in the red, but barely, trading at 15.5 cents. And Chainlink down 1%, trading just below $13. All right, now let's break down our next story of the day, shall we? According to on-chain analyst Willy Woo, the price of Bitcoin could achieve a conservative target of $200,000 in 2021. Now, I must point out, we've come a long way, as some of the top analysts right now are extremely bullish, not even calling a $100,000 prediction, but calling 200,000 or even 300,000, like Citibank analysts recently came out predicting a $318,000 Bitcoin price by December of 2021. Now, the prediction revolves around the fact that longtime investors seem more confident in the recent rally. You can say that again, as we've been holding pretty strong at around this $19,000 support. Now, there's two key data points that suggest Bitcoin's ongoing rally could explode higher. First is hodlers, or longtime Bitcoin holders, which aren't moving their funds for longer than in previous rallies. And second, Bitcoin held on exchanges continues to decrease, which reduces selling pressure. And as I've been breaking down all week right here on the show, we're talking about a Bitcoin shortage incoming, especially with all the massive institutional adoption from PayPal, Grayscale, Square, MicroStrategy, and the list goes on and on. They're purchasing way more than the Bitcoin supply, which is currently being mined. And we also have a bullish Bitcoin reaccumulation phase, which is occurring right now. The reaccumulation of Bitcoin has remained a consistently bullish trend throughout 2020. It has continuously decreased the selling pressure on BTC, allowing a more stable rally without major 30 to 40% corrections as frequently seen in 2017. That's right. So when we drop 15% for a correction, that's nothing in comparison to 2017 when we were witnessing consistent 30 to 40% dips. You feel me? Now, Wu noted that he is bullish for 2021 because reaccumulation phase means the amount of Bitcoin that could be sold is much lower compared to the previous bull cycle. Checking out his tweet right here on crypto Twitter. Views on 2021. My top model suggesting $200,000 per BTC by the end of 2021 looks conservative. $300,000 not out of the question. The current market on average paid $7,456 for their Bitcoins. You are all geniuses. That's right. And if you're watching the show, you're especially a clever mofo. Just saying. And all Bitcoin hodlers, I should say like 99.9% are in profit right now, especially with Bitcoin being at about that $19,000 price point. And he goes on to continue right here. I've never been so bullish for 2021. This reaccumulation phase coincides with spot market inventory depletion, roughly 2x longer and deeper than the last cycle. It will send Bitcoin. You can see the Bitcoin held on spot exchanges as the inventory dropped 19% over the previous 10 months. Not too shabby, right? And this is brought to you by Glassnode Analytics. And then Willy Woo continues on right here. Also, the dollars gained in market cap per dollar invested has significantly increased over past cycles. Hodlers holding stronger. It was $2 in the 2013 bull run, $2.50 in 2017, and $3.50 or more for 2021, all pointing to reflexivity increasing and amplified 2021 bullish feedback loop. So as you can see, on-chain analyst Willy Woo is extremely bullish on the king of all crypto. Are you? Holla at your boy. Let me know in the comments right down below. And as reported in May, Bitcoin hodl wave data also supports the argument that hodlers from the 2017-2018 bull cycle aren't selling at these relatively high prices, including high net worth individuals or whales. However, this data also suggests that some earlier hodlers from 3 to 7 years ago are taking profits after a prolonged Bitcoin rally, heightening the chances of a correction in the short term. Now, Wu called a massive Bitcoin rally in March of 2020. That's right. Wu has been calling for an extended Bitcoin bull run since the pandemic. On March 4th, Wu told Max Keiser, the Keiser report, shout out to Max and Stacy, that Bitcoin could hit $135,000 in the bull run. He said at that time in March of this year, you can go 35 times the cumulative average of the price, and that's actually picked every single top in the 10-year history of Bitcoin. Right now, that's sitting above $50,000, but it keeps climbing the longer it runs for. So although the price of Bitcoin fell to sub 4,000 on March 12th in a Black Thursday crash that shocked the entire world, it has swiftly recovered since, and the bull trend then was bound to happen in March before the crash appears to be in full swing now, following Bitcoin's 9-month recovery. But in the near term, analysts believe that the likelihood of a recovery in the US dollar could cause Bitcoin to see a minor pullback following the biggest 3-week liquidation in the gold market. Analysts also see the precious metal rebounding, which could stall Bitcoin's momentum in the short term. Before we break down Max Keiser's most epic tweet here on crypto Twitter, as he discussed overthrowing the government and central banks and Bitcoin climbing to $200,000 before any liquidity is seen in the market. Again, first, let's take a look at the overall crypto market cap, sitting at $565 billion with about $115 billion in volume in the past 24 hours, and Bitcoin dominance barely back on the climb at 62.6% according to CoinMarketCap. And now checking out the top gainers within the top 100, we have S&T up about 2.5%, trading at 3.7 cents. BitTorrent up about 2%, trading at 0.0003. We have Aragon up about 2%, trading at $3.27. And XRP, again, the hard fork XRP, which is called Spark, is scheduled to be on December 12th, just a few days away. We have XRP up about 0.8%, trading just below 60 cents. And Dogecoin, Elon Musk's favorite altcoin, trading down 0.16% at 0.003, as most of the altcoins are currently in the red, and there's not that many gainers in the market. So checking out the biggest losers within the top 100, we have Ravane down 2%, trading at 1.1 cents. Satoshi Vision down about 2.5%, trading at $176. We have Neem down 5%, trading just below 25 cents. And Band Protocol, the competitor of Chainlink and Oracle provider, down 2.5%, trading at $6.59. Now, out of this list of the biggest gainers and losers, which altcoins in particular are you most bullish on? Drop me a comment right down below. And now checking out the Binance margins, we can see the bears are barely in control, leading with 50.8% shorts versus 49.1% longs. Are you currently bullish or bearish on the king of all crypto? Holla at your boy. And now checking out one of my favorite indicators is the Crypto Greed and Fear Index. Shows we're currently rated a 95 in extreme greed, which FYI is as high as I've ever seen it in the few years I've been following this metric. Yesterday was a 93, last week an 89, and last month a 90 in extreme greed. Now check this out. If you're not familiar with the Crypto Greed and Fear Index, extreme fear can be a sign investors are too worried. That can be a buying opportunity, aka BTFD, buy that freaking dip. And when investors are getting too greedy, like we're witnessing right now in the market, that means the market is due for a correction. All right, now let's take a look at this latest tweet from Plan B, the creator of the Stock to Flow model. And if you're not familiar with Stock to Flow X, it predicts a $100,000 Bitcoin price by the end of next year, so December of 2021, and a $288,000 Bitcoin price medium average between the years 2020 and 2024. He just tweeted this morning, Bitcoin and central bank balance sheets, which is money printer, go have gone hand in hand for the last 10 years, but now BTC is lagging behind about 2 orders of magnitude, which is about 100x room for growth. Now, if Bitcoin climb 100x from here, with the Bitcoin price currently trading around 20,000 for the sake of easy round numbers, that would put the Bitcoin price at about $2 million per Bitcoin. Do you feel that's likely to happen? And if so, by what year? 2025? 2024? Let me know your thoughts, whatever the year may be. I do feel that Bitcoin will be trading above $1 million, which is 7 digits, by 2025, which is the year preceding the following halving in 2024, which is when the market is known to go parabolic. Just wanted to point that out. And checking out some of the responses, Nick wrote, can't prove isn't spurious, so it's probably spurious to be fair. And Plan B responded, quite sure. For example, shows co-integration. Bit Harrington responded, considering everything that's happening, money printer, companies buying Bitcoin, helicopter fiat money, etc., the Bitcoin price is indeed way too low. 2021, fire. Touche. All right, before I break down this epic Max Keiser rant talking about Bitcoin overthrowing fiat and central banks and what this would mean for the Bitcoin price, first, I want to remind you to smash that show more button right below this video in the description for a detailed analysis of what's going on in the market. This goes for all 620 plus videos right here on my YouTube channel. I also have some very helpful resources for you to plug into, including the blog to my podcast, which could be found at cryptonewsyes.com. Also, be sure to smash that subscribe button to receive daily crypto news alerts every single day, just like this. It also helps greatly support the channel, and I greatly appreciate your support. You can also follow us on all the major podcasting platforms, from Spotify, the home of the Joe Rogan Experience, to Apple's iTunes. You can also follow me on Twitter to receive daily crypto news alerts. My Twitter handle is Crypto News Yes, and I am very active on crypto Twitter. And for those of you active on Facebook, I have a private crypto Facebook group entitled Crypto Alchemy. To join it, click this link, request to join. I'll be sure to plug you in. And for those of you active on Telegram, I do have a private crypto Telegram chat, which is uncensored. To join it, click this link. You'll automatically be added, and I'm looking forward to connecting with you personally on the inside. All right, now let's break down this epic Max Keiser rant he just shared yesterday. We have enough interest in Bitcoin now to overthrow fiat and central banks. We don't need any new Bitcoiners. If you're not aboard, there's still time, but not much. Severe shortages are developing, and we may see a gap between $20,000 and $200,000 before any liquidity again. And he continues, I spent 10 years educating people about Bitcoin, which he has. You can check it out on the Keiser report. He's been telling people to buy Bitcoin since 2011 when Bitcoin was trading at $1. Now Bitcoin is trading at $19,000. So the real question is, when are you going to listen to Max Keiser? And he continues, now is the time to pull the drawbridge of $20,000 and overthrow fiat money and central bankers and watch panic buy-in by high net worth individuals gap the price to $200,000 per BTC. And he continues, Bitcoiners should avoid regulators. I repeat, Bitcoiners should avoid regulators. They are poison. Just focus on getting large funds and high net worth individuals to panic buy Bitcoin to trigger a gap to $200,000. Then we can overthrow government as well as fiat money and central bankers. Janet Yellen, who's the former chairman of the Fed, is combining the Treasury Department with the Fed, which makes it easier. All right, what are your thoughts surrounding Bitcoin overthrowing central banks and fiat currency? Drop me a comment right down below. We have Stanley Drunken Miller, we have Paul Tudor Jones, we have major asset management companies like BlackRock, the largest in the world. We have Fidelity, another asset management company that controls over 7 trillion in assets under management. So I agree 100% right here. Again, I've been discussing this right here on the show, a potential Bitcoin shortage incoming. I believe this is going to happen. It's only a matter of time because after these major corporations suck all the Bitcoin away like a black hole, there's only so much to go around. It's limited, it's scarce. Bitcoin is the hardest form of sound money in existence, and it is what it is. That's due to the scarcity built into the Bitcoin blockchain. Now, for Bitcoin to go from 20,000 to 200,000, if you do the math, that's just 10x, which is nothing during a parabolic bull run. This could occur realistically next year in 2021, but it doesn't even have to take that long. It could occur super fast. Bitcoin could 10x before you know it. And if that was to happen, we're talking about almost $250,000 Bitcoin. This could overthrow fiat and central banks as fiat becomes literally worthless. Money printer continue to go, and people are losing trust and faith in not just government, but especially in government-backed fiat currency, which is backed by absolutely nothing but military force. Just saying. All right, now I shared my thoughts, so I'd love to know your thoughts in the comments right down below. Do you feel this is likely to happen? And when do you feel that we can 10x from a $20,000 Bitcoin price to $200,000 realistically? Drop me a comment right down below. I'm looking forward to reading them. And now for a quick recap of what I covered with you right here in today's show. I shared the 3 key metrics to watch as Bitcoin price tries to top this critical $20,000 resistance. Also in today's show, I shared on-chain analyst Willy Woo says Bitcoin hodlers are only getting stronger, as he shares right here in this tweet. My top model suggesting $200,000 per BTC by the end of 2021 looks conservative. $300,000 not out of the question. Also in today's show, I shared the latest from Plan B, who talks about a potential 100x room for growth, which would take the Bitcoin price to about $2 million per BTC. And I also shared the latest, most epic Max Keiser Twitter rant. So I hope you really enjoyed it. So where do you feel the Bitcoin price is likely to go from here? Drop me a comment right down below. Well, that's going to conclude today's show. As always, I appreciate you tuning in and journeying along with me inside this incredible crypto matrix. If you gain value out of today's show, be sure to smash that subscribe button, that's right, and turn on all notifications to receive daily premium crypto news alerts every single day, including weekends just like this. And real quick before I go, if interested in tapping into OPM, leveraging other people's money to grow your wealth and crypto portfolio, then smash that link right below the video in the description. You'll be glad you did, and register for this free system. And I look forward to seeing you on tomorrow's episode. Peace.